Welcome back to Iraqi Dinar Alert. Current value of the Iraqi Dinar 2026 update.
Current value of the Iraqi Dinar 2026 update.
The Iraqi dinar, once a stable regional currency, has seen fluctuating values over the past decades. Today, investors, collectors, and traders closely watch its market price, hoping for stability or even a potential revaluation. But what determines the current value of the Iraqi dinar in 2026? Let's start with the big one: oil. Iraq holds some of the world's largest proven oil reserves. The global price of oil and Iraq's ability to produce and export it are the biggest factors influencing the dinar's strength. When oil prices are high and exports are flowing smoothly, foreign currency, especially US dollars, pours into the country. This boosts the central bank of Iraq's foreign reserves, giving it more power to support the dinar's value. In 2026, with global energy demands shifting, Iraq's strategy for managing its oil wealth is more critical than ever. Consistent production levels and favorable market prices directly translate to a stronger economic foundation and, in turn, a more stable dinar. Next up is political stability and security. For any currency to be strong, people need to have confidence in its government and the country's future. The political landscape in Iraq has been complex for years. Any signs of instability, internal conflicts, or political gridlock can scare away foreign investors. On the other hand, a stable government that can effectively manage the country, pass economic reforms, and ensure security creates a predictable and attractive environment for investment. In 2026, the international community is watching closely to see if Iraq can maintain political unity and security, which is absolutely essential for building the long-term trust needed to strengthen its currency. A secure environment encourages businesses to thrive, creating jobs and economic growth. Then we have economic reforms and diversification. Relying almost entirely on oil is a risky game. The Iraqi government knows this and has been talking about diversifying the economy for years. This means developing other sectors like agriculture, manufacturing, and tourism. How successful have these efforts been by 2026? A diversified economy is more resilient. It's not completely at the mercy of fluctuating oil prices. When other industries start to grow and export goods, they also bring in foreign currency and create a more robust economic base. Key reforms, like streamlining business regulations, tackling corruption, and modernizing the banking system, are crucial. The more Iraq can show it's building a modern, diversified economy, the more confidence investors will have in the long-term value of the dinar. Don't forget the Central Bank of Iraq's monetary policy. The CBI plays a direct role in managing the dinar's value. It controls the money supply, sets interest rates, and manages the daily currency auctions where Iraqi banks buy US dollars. These auctions are key to controlling the exchange rate. If the CBI wants to strengthen the dinar, it can sell more dollars or raise interest rates to make holding dinars more attractive. Its decisions are a direct lever on the currency's day-to-day value. Observers in 2026 are paying close attention to the CBI's transparency and independence. A central bank that acts predictably and is free from political interference is a cornerstone of a stable currency. Finally, let's talk about international relations and foreign investment. Iraq doesn't exist in a vacuum. Its relationships with neighboring countries, major world powers like the United States and China, and international financial institutions like the IMF and World Bank are incredibly important. Positive diplomatic ties can lead to favorable trade deals, foreign aid, and, most importantly, foreign direct investment. When international companies feel confident enough to build factories, open businesses, and invest in Iraqi projects, they bring in capital and expertise, which stimulates the economy. The level of foreign investment in 2026 is a clear indicator of global confidence in Iraq's future. So, what does this all mean for the Iraqi dinar in 2026? Its value is a complex puzzle, pieced together by oil prices, political stability, economic diversification, central bank policies, and international relationships. It's not just about one single factor, but how all these elements work together. For those watching the dinar, understanding these have you ever wondered about the value of the Iraqi dinar and what's behind its exchange rate? Well, let's dive into it. As of early 2026, the Iraqi dinar is trading at approximately $1 to 1,460 Iraqi dinars. Now, this number isn't just pulled out of thin air, it's influenced by several powerful forces. A major factor is Iraq's oil exports. As one of the world's leading oil producers, the price and volume of oil sold on the global market have a huge impact on the country's revenue and, consequently, the strength of its currency. When oil prices are high, more foreign currency flows into Iraq, which can strengthen the dinar. Then there's political stability. A stable political environment encourages investment and economic growth, which builds confidence in the currency. On the other hand, any instability can make investors nervous, potentially weakening the dinar. It's a delicate balance that the country is constantly navigating. We also can't forget about global market trends. Things like changes in the value of the US dollar, global economic growth, and international trade policies all play a part. The dinar doesn't exist in a vacuum. It's connected to the entire world economy. At the heart of managing all this is the Central Bank of Iraq. Think of it as the conductor of an orchestra. It uses various monetary tools to maintain the currency's stability. This involves a careful balancing act between managing domestic needs, like controlling inflation, and meeting international trade requirements. Their decisions directly influence the exchange rate you see on the market. So, why do some people believe the dinar will be revalued? The hope is that as Iraq's economy diversifies beyond oil, rebuilds its infrastructure, and becomes more politically stable, the dinar's fundamental value will increase. This would mean the central bank might officially change its value to reflect a stronger economy, a process known as revaluation. This theory gained traction after the fall of Saddam Hussein's regime, with many believing that a new, democratic Iraq would unlock immense economic potential. The idea is that the current rate is artificially low due to past conflicts and sanctions, and once the country is fully back on its feet, the dinar could return to a much higher value, similar to what it was decades ago. People who hold dinar are betting on this future prosperity. However, many economists urge caution. They argue that a sudden, massive revaluation is unlikely and could be disruptive. They point out that currency values typically change gradually, reflecting real economic improvements over time. They suggest that a slow and steady appreciation of the dinar is a more realistic scenario, tied to tangible growth in non-oil sectors, successful economic reforms, and sustained stability. The journey of the Iraqi dinar is a fascinating story of economics, politics, and global interconnectedness. From the bustling oil fields to the strategic decisions made in the central bank, every piece of the puzzle affects its value. Whether you're an investor, a student of economics, or just curious, understanding these dynamics gives you a clearer picture of Iraq's economic journey and its place in the world. The future of the dinar is tied to the future of Iraq itself, and it's a story that continues to unfold and has huge implications for an entire nation. The Iraqi dinar. What's the real story behind its value? And what does it actually mean for investors and for Iraq's future? Let's break it down. First, a quick history lesson. Before the Gulf War, in the early 90s, the Iraqi dinar was quite strong, trading at over $3. But after years of conflict and economic sanctions, its value plummeted. The country introduced a new currency in 2003, but it has struggled to regain its former strength. Today, you'll see exchange rates where thousands of dinar are needed for just $1. This history is crucial because it sets the stage for all the speculation we see today. So, why is there so much talk about the dinar potentially revaluing? The core of this speculation lies in Iraq's immense natural wealth, particularly its oil reserves, which are among the largest in the world. The theory is that as Iraq's economy stabilizes and grows, driven by this oil wealth, its currency should naturally strengthen. Proponents of this idea believe that the government might one day decide to revalue the dinar, instantly increasing its international purchasing power. This hope fuels a niche but passionate community of investors who are buying up large amounts of dinar, betting on a massive future payday. Now, let's look at the flip side. For every hopeful investor, there's a chorus of financial experts urging caution. They point to several major hurdles. Iraq's political landscape is complex and often unstable. Corruption remains a significant challenge. And the country's economy is heavily dependent on oil prices, which can be very volatile. These experts argue that a simple overnight revaluation is highly unlikely. Instead, they suggest that any strengthening of the dinar would be a slow, gradual process tied to real economic reforms and long-term stability, not the lottery ticket win some are hoping for. So what does the current value of the dinar mean on the ground for the people of Iraq? A weak currency makes imported goods very expensive, which can drive up the cost of living. However, it also makes Iraqi exports cheaper and more competitive on the global market. For Iraq, the main goal is stability. A stable currency, even if it's at a low value, is predictable. It allows businesses to plan, encourages foreign investment in sectors beyond oil, and helps the government manage its finances. The Central Bank of Iraq has been working to maintain this stability, which is a far more immediate priority than a dramatic revaluation. Now, for the investors watching this, the Iraqi dinar represents a classic, high-risk, high-potential reward scenario. If you're considering it, you have to be honest about what you're getting into. This is pure speculation. While the idea of a revaluation is enticing, you're betting against significant political and economic headwinds. Many financial advisors would warn that the chances of a massive, sudden jump in value are slim. The risks are substantial, and any money put into dinar should be money you are fully prepared to lose. It's not a traditional investment like stocks or bonds. It's a high-stakes bet on a country's future. So, what's the takeaway here? The story of the Iraqi dinar is a fascinating mix of history, economics, and human hope. For Iraq, the journey is about building a stable, diversified economy, where the currency's value is a reflection of real, sustainable growth. For investors, it's a reminder that where there is great potential reward, there is often even greater risk. A stable and prosperous Iraq would be a win for everyone, but the path to get there is long and uncertain. What are your thoughts on the Iraqi dinar? Are you an investor, or just curious about the economics of it all? Let me know in the comments below. I'd love to hear your perspective. And if you found this breakdown helpful, don't forget to hit that like button and subscribe for more deep dives into global finance. Thanks for watching, and I'll see you in the next video.